I found this article yesterday in the Wall Street Journal compelling, and I wanted to talk a little bit about it. The link is down in the description if you want to check it out for yourself. Money flows where confidence goes. For years, US stocks have been the ultimate money magnet, outperforming most other markets, attracting trillions in investment, and reinforcing the belief that your money is best invested here in the US. But in 2025, that sentiment seems to be shifting a little bit. Some investors are pulling their money out of the US and looking elsewhere. Europe, China, defense stocks, commodities, really anything. Why though? What's causing this to happen? Well, let's start with some immediate reasons this might be happening. As a little bit of a preface here, the price to earnings ratio, or PE ratio, is the price you pay for a share of stock in a company relative to the earnings each share is generating. Well, by this metric, US stocks are expensive, insanely expensive. The S&P 500's price to earnings ratio is around 24.6. Now compare that to Europe's stock 600 at 17.4, the DAX at 17.8, or Hong Kong's HSI at 12.6. In plain terms, investors are paying a much higher premium for US stocks than almost anywhere else in the world. Keep in mind, this is just one factor and does not reflect anything in particular on its own, but it is something to take into consideration. Then there's the US political climate. The current administration's tariff policy is creating a lot of uncertainty for investors and has the potential to drive up costs for businesses, making it riskier to hold US stocks. At the same time, international markets, particularly in Europe, are actually looking more attractive. Germany has just finalized a massive £1 trillion spending package aimed at revitalizing its economy both through defense and infrastructure investments. While this move has sparked some concern about inflation, it's also signaled Europe's intent to become less dependent on the US and strengthen its economic and military position. Investors are watching closely, seeing both risk and opportunity in this. And that brings us to one of the biggest themes driving this shift: defense. European nations are boosting military budgets as the US takes a more isolationist stance. Germany's massive spending package is set to fund everything from military hardware to cybersecurity, intelligence, and even AI-driven defense systems. It also includes a £500 billion investment fund for infrastructure. This is transportation, digital networks, power grids, and climate initiatives. The result? Well, European defense stocks are surging, and investors are piling in, believing that this is the beginning of a long-term transformation in the European economy. Now, for some context, what we're seeing here has absolutely happened before. In fact, investors move money globally all the time. It's just that the US has been the dominant player for so long that many have forgotten it's not actually invincible. Think back to the 1980s. Japan was the place to be. Its stock market was booming, its companies were taking over the world, and investors flooded in. At its peak, Japan's stock market was 40 to 45% of the entire global market capitalization, even higher than the United States. But then the bubble burst. The 1990s saw Japan enter a lost decade, and the money fled. Or consider the early 2000s. The US was still recovering from the dot-com crash, while emerging markets, especially China, were exploding. Investors rushed into BRICS nations, that's Brazil, Russia, India, China, and South Africa, believing that they were the future. Some of those bets paid off, others didn't. The lesson? Well, just as I said earlier, money flows where confidence goes. When valuations get too high, risk increases, or better opportunities emerge, capital flows shift. I think it's happening again right now. But let's take a step back for a minute. Why do investors move their money like this? What's the psychological force at play? One big factor is recency bias. Investors assume that what has worked recently is going to keep working. For years, US stocks have dominated, so it became the default choice. Now, some cracks are appearing, whether it's in economic data, inflation concerns, political uncertainty, and people are starting to question their bets. Another big one? Herd mentality. When enough investors start making the same move, it creates momentum. Nobody wants to be the last person holding the bag when a market shifts. Finally, and this is something we talked about in a recent video, investors hate losing money far more than they like making it. When things start looking shaky, they'd rather take their profits and move to what feels like a safer bet, even if that means taking on new risks in a less familiar market. So does this mean US stocks are done? Unlikely. America is still home to some of the world's biggest, most innovative companies. Artificial intelligence, tech, biotech, they all continue to dominate. And long-term believers in American exceptionalism argue that this is just a temporary shift. But the market cycles. There will always be times where international markets look more attractive. The only question is, how long is it going to last? The answer depends on a few things. The First one being US economic data. If inflation stays high or consumer spending slows, investors might keep looking elsewhere. Second would be if Europe and China keep pumping money into their economies, I could see how this would attract even more investors. Last being geopolitics. If trade wars continue to heat up or US foreign policy stance becomes more aggressive, international investors might reduce their exposure to the US markets. So what should you do as an investor? Should you pull your money out of US stocks? I don't know. That's not for me to say. As always, you should talk to a trusted financial professional before making any investment decisions. I will say that a well-diversified portfolio should be able to withstand at least some of what we're seeing here. As we've talked about in a recent video, I think the days of just parking everything in the S&P 500 and calling it a day might be over. It's important to stay informed so you can position yourself the best way possible, which is why I will recommend that you hit the like button below and subscribe to my channel. I upload a new video every weekday, striving to provide an objective look at what's going on in the world. Guys, there are opportunities in global markets, whether in Europe, emerging markets, undervalued sectors, but there are also opportunities here in the United States. At the end of the day, it just comes down to your risk tolerance and your investment strategy. So what do you think? Are you shifting your investments around or are you riding this one out? Let me know in the comments below, and until next time, have a good one.